Hello and welcome to the latest Sharesify podcast. Today I'm joined by my regular sparring partners, Ian Conway and Steve Fraser. Hi, chaps.
Hello.
Hi, James.
Now, today we're going to be talking everything from markets, tech stocks, to trench coats and even Tenerife. Steve, what's piqued your interest in terms of markets this week?
Well, yeah, I mean, it's interesting. I mean, it's been a bit of a quiet week, I suppose, so far. FTSE's kind of traded fairly sideways. S&P and Nasdaq 100 also much the same. Although futures are indicating that tonight might be a better session over in New York. I mean, something that was hitting the news and caught my eyes is Donald Trump is going to China and he's taken a whole deluge of corporate executives with him for high-level talks. These include Apple's Tim Cook, Jensen Huang of Nvidia, and Elon Musk, who needs no introduction. So it'd be interesting to see. Obviously, corporate concerns are going to be on the agenda, and corporate concerns are, of course, of interest to investors. So who knows what will come out of that? Maybe nothing will come out of it, but it's something to keep an eye on. And the other thing that I noticed in today's market is quite firm days trading so far from Polar Capital Technology Trust and Allianz Technology Trust. So that suggests that the big kind of push in the tech, the big driving tech force is kind of impacting into the UK as well with those big holdings. And one other thing that caught my eye was Intertek. It's a company I know Ian knows quite well, all about inspections and certification, etc., etc. It looks like the board are coming to some kind of conclusion around a big multi-billion-pound bid from one of their peers, EQT. So something else just to look out for.
Yeah, bit of a sore point that one, Steve, because I had a note ready to go on Intertek in beginning of April, and then they announced a strategic review. So I thought, I'll hold off. And then the next thing you know, there's competing bids for it. But it looked too cheap to me for the quality of the business and the growth rate and the return on capital employed. So I'm not surprised it's ended up being bid for, to be honest with
And
you.
it goes right back to what we've been saying for it's seemingly years now. It's just about overseas buyers, either peers or private equity, just cherry picking some very high quality businesses. And
Yeah.
Insec is a very large company, a FTSE 100. So a smaller scale is Gamma Communications, which is also seemingly in a bid situation.
Oh, yeah.
It's been sniffed around by various different parties. It's a really high quality business in telecommunications equipment, a really strong designer, but it's just been really beaten up. And you've got to observe that investors are looking at that and going, "That's too cheap.
Yeah.
We're going to buy it." If UK investors won't give it a proper rating, we're going to take it off the market.
Yeah, that's what happens, I'm afraid. Talking of quality, we had Spirax results today. Now, there's a classic quality growth stock, always has been. It's not a massive grower. I put it at about 8% CAGR of earnings, and that's going back over more than 30 years. But they came out today and said they're growing faster than the market, and that stock a couple of years ago was trading on a stratospheric multiple because earnings are above trend, and people did what they always do. They get very excited about things. I mean, it was on something like 75 times. They get very excited about stocks and they start extrapolating growth when they shouldn't be. So actually, it's had quite a derating. It's back to on my work, at least it's back to fair value. And as Warren Buffett said, I'd rather buy a wonderful company at a good price than a good company at a wonderful price. And I think we're in that territory now with Spirax, so that could be a nice one to watch. We had Imps as well, Imperial Brands. Again, slightly better than expected, and the stock went up on the back of it. It's been a real laggard if you look at BAT. BAT has been a stormer over the last 2 years, gone from below below £25 to above £45. So if you were in and you've had all the dividends in the meantime and the buybacks, you've pretty much doubled your money. I wonder if Imperial could be the next mean reversion candidate, but I can guarantee you one which isn't, which is Vistry, which I'm afraid this morning announced that first half earnings will be significantly lower than previous year because they're selling off as many as they can of their completed and near completed homes to raise cash, basically. So they're discounting. All that hit is coming in the first
This is
half.
Vistry in.
This is Vistry,
Yeah, I don't think you mentioned the name, but
sorry, Vistry, the partnerships house builder, and the stock's just dropped to a 15-year low. Now, I've been through all the house builders after the results, and frankly, they're cheap, but I wouldn't go near them with a barge pole. Especially with now we've got this political uncertainty on top of the economic uncertainty. And Vistry has just demonstrated that if you want to get rid of houses in a hurry, you've got to discount them. So, as I said, as I've been saying for ages, leave well alone. They are not going to really revert.
For a number of years now, I mean, share prices have been depressed in this house building space, but and dividends have looked really quite enticing. But you've got to really conclude that the market is saying those dividends are simply not reliable. You can't trust them as far as you can throw them. So I think it's really worth bearing in mind. They might have 4, 5, 6% yields, but that isn't necessarily what you're going to get. So
no, absolutely,
be really cautious.
James, we said last week it would be a big consumer week this week. What have been your highlights?
Yeah, lots going on there, Ian. So Greggs pick up in sales, kind of answering the critics who kind of say, we've reached peak Greggs in Britain.
We're not at peak sausage roll yet.
We're not at peak sausage roll just yet. And it's interesting, they've picked Tenerife as the location for the first overseas airport outlet. So I suppose if you're going to take a quintessentially British brand overseas, why not, go to the place where all the Brits like to holiday?
Stay classy.
I'm just shocked it's not Alicante for all those Benidorm visitors, but still, I suppose Tenerife is the next best thing.
That's next, Steve. That's next.
Yeah, exactly. Another interesting was ASOS, which is selling its Lichfield warehouse to M&S. So kind of ASOS is very much in slashing cost mode, repairing the balance sheet, got too much capacity, whereas M&S is expanding its online business. So it probably looks
really
a good deal.
like that.
Yeah,
really
the market,
like that, didn't it?
Indeed, yeah, looks a good deal for both parties probably. And then among the micro caps, Angling Direct delivered record UK sales, upgraded its growth targets, but the shares sold off a bit on concerns the Middle East has forced the consumer to pull in their horns a bit, and costs as well, fuel and freight, those sort of things. So those were
Talking
my
of
highlights.
small caps, James, you've been doing quite a bit of fishing around the small cap market, haven't you? What did you find?
I've been reeling in a few. Spoke to Vertu Motors as well this morning. Very resilient numbers, actually, given all the headwinds swirling around automotive retail. Continuing to return capital through buybacks, and they're expanding their their presence with Chinese brands in the UK, which is very interesting.
Oh, very smart.
I'm increasingly seeing BYD cars on the road actually, which is a sign, because I mean for years I've been reading about Chinese exports, but I've not really been seeing too much of it. But really starting to see BYD among others on roads around London now. So they're really it's happening, obviously.
Yeah, more and more. Steve, you still got a couple of big tech names, haven't you, on the radar?
Yeah, I mean some quite good, interesting ones coming out. So tonight we've got Cisco Systems, which of course is big in any kind of technology infrastructure, big networking business. It's very much positioned itself, easy for me to say, positioned itself around serving the sort of AI infrastructure market and so on. So it'd be really interesting to watch to see what the commentary is tonight, see how upbeat they are about spending patterns. We know there's lots of pressure on CapEx, but there's lots of money being spent. So something really interesting to watch. And then tomorrow night, you've got Applied Materials, which again is very much in that same AI infrastructure space. They provide equipment and kit to semiconductor fabrication units. So another really interesting company to be well worth watching. That's after hours tomorrow evening.
Right. And James, tomorrow, return of the Mac?
Yeah, return of the trench coats. I'll get my cashmere scarf on ready for the results. I'll be waiting. So Burberry full year results, not heard from them in a while. Has that Middle East conflict impacted the luxury rebound? Progress on the new CEO's turnaround strategy. Very interested indeed. And then we've got a first quarter update from ITV, so the producer and broadcaster. That'll also be one we'll keep a close eye on.
That's interesting, James, because I mean it's been talked about ITV for years as a potential takeover target, isn't it? Because it has got this really deep library of content, and we have so many streaming services these days. You can't constantly be making new stuff. It's just surprising that no one has ever seemed to actually come and put any money on the table.
Yeah, no, exactly. We'll see the sort of strength of the results. We'll see if it has merit as a standalone, or if someone will pick it off on the cheap, I guess.
Yeah. Well, there you go. All that to look forward to. So stay tuned. If you've enjoyed today's podcast, like and subscribe on your favourite provider, and we'll catch up with you on Friday. Till then, take care.
Cheerio.
Cheerio.